Hello and welcome to this video. JD here. In this video I just wanted to show you the difference between retail traders and big money, big whales, institutional money, smart money, however you wanted to call them. There is a big difference on how they behave when entering the market and how they position themselves into the price. And I just wanted to show you how the herd, like the retail traders, amateur traders, move the market and prices, and how they get advantage of that. And my question to you is, where do you want to be? This will show you where really you wanted to be. So let's go ahead and start. It's 9:25 New York time. That's 7:25 for me. I'm 2 hours behind. And so you can see how the market is starting to behave right now. Just a quick pause here, just a moment. So yeah, okay, I want to show you how retail traders and trading behaves when market opens. That's 9:28. Market opens at 9:30. This is the E-mini Nasdaq on August 31st. That's the last day of the month, and we are open. So take a look at how they behave. This is a bunch of traders going up and down, pushing the open and close button, and selling and shorting all over. So see that. Now this chart here shows us the retail traders. The middle one shows us the smart retail traders, and this one here shows us the big smart money traders, or the big boys, the whales, institutions, whatever you wanted to call them. So this is just to show you how they behave and how you can trade with smart money. If you use these tools that you can find in the market, you will understand how this is working, and your trade will be different from now on if you understand what you're doing and why you're doing it, and you wait until the market to show you what are they doing. So here we start seeing a trade that is selling to 129, 125 contract. So this means they are starting to sell into this big up move. In the meantime, they keep selling and selling. I mean, this retail traders, they are selling and they are bringing the prices up. That's a pretty good thing. But we do not trade the first hour after the market opens. So from 9:30 to 10:30 New York time, we don't trade. We wait until the market to show us the initial balance high. That's the higher price that is printed in the first hour of trading, and then we put our trades and we manage our system. So there we go. There is some pressure to the downside due to these trades here, but we will take a look at how they behave. This is a smart retail traders. I call them smart retail traders because probably this is hedge funds, this is some kind of hedging, and there is also a high frequency trading here. The day open and close for short gains, like scalping and just grabbing some kind of ticks there, 1, 2, 3, and they open and they close in the same time. So this is how you understand where the smart money acts. They were not participating in this move down here. They were not participating around this. They were not participating here at all. You can see how they participate here, the retail traders. You see how the smart retail trader participates here, but they don't. They leave that for them. They want the price to go up, so they can sell after that. So that's interesting. So let's speed this up and see how this thing develops. 111 print there, 137. So let's see how this prints and ends. So yeah, let's take a look at this. price is going up higher. This is the initial balance high as of the moment, but we are not near close the 8:30 mark or 10:30 mark New York time. This is the point of control up here. It's wanted to go up higher, but we have the point of control up on the top near the value area high, and it's going into the very low volumes zones right there, and they start to sell right at that point. 119 contract, 365 contract there. They are selling this big up move. They are selling it because they think that this thing will turn back down. See that? Okay, since we are not participating in the market as of now. Why not? Because 930 is not yet there, so we don't have the final initial balance high printed. We need that until 9:30, 10:30 New York time, which is that now. So here we have the final initial balance high. Is that's the one? This is the initial balance low. This is the first hour of trading in the E-mini Nasdaq contracts, and we have been looking that the smart money, contrary to these guys here that are selling and buying all over, they are selling and closing positions up in the top. So that's interesting. That should give you an idea on how these guys behave. These guys behave in a different manner that we retail traders do. They wait for higher prices in order to sell. There is another 120 contract print there. That's a 19 split factor. So that's a 19 split factor. That means that they splitted that trade 19 times, 19 contracts at a time. 104 was printed there. So we have this guy here, right there. 120 and 140 something is not that clear. So this is the difference between retail traders. I don't know if you have seen this before. This is a video to show you how retail trader moves and how smart money moves. So you want to be where you want to be. I'm not saying these guys lose the battle. They normally maneuver to bring the trade into position. So, but what I'm looking right now is that the heavy volume has happened here in this zone right there, and that's what we want to see. That means price is gonna go. It will go down. This here, it's where all these smart retail traders have been selling and buying, and I normally don't look at these guys here. I don't care what are they doing. I just look this or show you this because you have to understand that there is something in between. But that is not my intention here. My intention here is to show you how the smart money moves his money. Okay, so that's the price going down. It's 11:30 New York time. So they were selling up here, but I want to show you something. They were selling when they were buying. Just a second here. So yep, I will slow this down a little bit for you to see. This is how they behave. They start to sell there. I'm gonna make these legs a little bit shorter so you can see where all this happened. So you see selling here, selling here, selling here, selling here, selling here. They were selling while the price was going up. That's the normal behavior of the big money. And now they start to close their position. That's why you have this green dots in 103 contracts, 131, 110, 110 there. But prices will go up, and we'll see that they will push this market a little bit down because they are interested in bringing down. They were selling the way up, so they need the price to come back to those levels or to surpass them for them to make some profit. So they are smart. They are big boys. They are big boys. They have money. They have, you know, their pockets are quite deep. So they know how to do this. They keep closing positions there, and then we're gonna see what the market does. Yep. Let's wait. There is no participation of the big boys. That price is there. That move up, they were not participating. So not buying, not selling. We'll see that. Price is going up a little bit, but they are not participating there. They almost finished their trading day. They sold here. The first selling happened at 63, and the price went all the way down to 47. So imagine 63 minus 47, that will be 16 points by 4 ticks a point. That's 64 ticks by 5 ticks. That's 320 by 300 contracts. That's a $96,000 trade right there. So that's how you identify where you want to be. If you want to be from on the side of the smart money, or on the retail traders, amateurs, and not so smart side. So I wanted to show you this just for you to understand how the market behaves, but more than that, how the big institutions and big traders, how they manage their trades. And you can use this tool, which is available in the internet, and you can use it however you want. I'm not endorsing this tool, and I'm not affiliated with them, but I can say that it's a pretty interesting tool. So look at that. They expected the price to go down. They went past the initial balance low, this level here, this blue line there, and they start to close and reverse positions. So that's something similar to what we saw here at the selling right there, that 119. That's 112. So that's interesting. That's how they do money. See that? That's how they make money. That's how you can see how they are behaving. So I hope this video helps you a little bit and understand how the market moves. And I'm gonna speed this up so you can see how it ended when the market closed. That's a footprint on how the big smart money moves. So yeah, it's a pretty good thing to see this in the market and to have the tools to let you see this. So I like this. I like it. Right. In another video, we will talk about dawn depth of market and how we can use a reconstructed tape to identify this trade, reading the tape. And that's another lesson, and that's another thing. See how they are plotting their sellers there. Probably they are closing positions, and that's why they print there. Now, the smart retail trader, I don't pay attention to these guys here. I don't want to get confused. So I prefer to go here with the smart money, big money, and the retail trader just to show me how they are doing their thing. That's lose money. Okay, market is about to die here. It's about to close. So you can see now how this thing works. And I like this. I like to show you this. It's a pretty good thing. It's a pretty good stuff. And you can see the difference between retail traders and smart traders. I hope this video helps you. And if you have any question or any comment, please write it down in the comment section or drop me an email. You will see that in the description of this video. So JD here, and but let's be in touch. Thank you.